Jharonne Rogers-Kniffen, CEO of J. Rogers-Kniffen WWE, and Jharonne Martis, the Director of Consumer Research at Refinitiv. So, Jharonne, I know that you're looking at retail. There's some names that we know are the better of the bunch, but you're actually looking at the ones that may default. What names are those and why?
Like these, we turn to the balance sheet and cash flow statements to see who can weather the storm better. And for that, our StarMine credit ratio model tells us that companies that have a high probability of default are those like the department stores who had been vulnerable for some time because of weak mall traffic. Other names that are also at high probability risk include iconic brands. They provide a lot of the merchandise for those department stores, and also Ascena brands. But also when you look at the same store sales, you see that a lot of the cruise ships have weak numbers there. And also from the privately held company, our text mining model tells us that Lord & Taylor is also at risk.
Wow, and those are some names we really know, from Pier 1 to Dave & Buster's, tailored brands. So what are your thoughts, Jen, when you look at what's going on here? I mean, are there going to be some winners? Because, by the way, the retail index is having its best month ever, up about 25%.
Well, first off, my thought is that Jharonne's list isn't long enough, because we need to add Neiman's to that, and we need to add JCPenney to that, and they're definitely going to be some failures, right? She did mention Lord & Taylor at the top end. They will go as well. And so the survivors, Nordstrom survives, Macy's survives, and Kohl's survives. But boy, it won't be pretty on the other side, because I anticipate that Macy's will reopen with about 175 less stores than it went in with, because it had already told us there were 125 it didn't want. And I think Nordstrom's may reopen with 20% less of its full-line stores. They have 123 now. They could open with more like 100. So I do think you're going to see some big changes. I also think inside the mall, just like Jharonne said, Ascena is in trouble. So Loft and Taylor, several other stores inside the mall, Justice, which is also part of Ascena. But we could see closures from Abercrombie and Fitch. We could see some closures from Urban Outfitters. We'll certainly see some closures from Gap. I estimate that 20% of the mall square footage inside the mall could not reopen, or reopen for going out of business sales only. So if that happens, the mall is going to look a lot different for a while. And speaking of malls, I've been telling you for ages, 300 malls were in danger. Now I think it's 500.
So tell me, Jharonne, when you look at the positives of this, I mean, you and Jen certainly are in agreement about the defaults and the closures and the dwindling down of what we're seeing in retail. Where's the positives?
Well, it's interesting because this coronavirus has definitely changed consumer behavior. They are at home and they are paying full price as opposed to a discount. They're paying full price for robes, socks, underwear. All of these items have sold out at a very fast rate during the month of April. Refinitiv discovered in a partnership with Style Sage. All of this while growing pandemic beards. Sales of grooming and trimming products for beards have sold out at rates twice as much as last year, while at the expense of shaving, who now is down. P&G is expected to see a drop of 10% in revenue because of their shaving products. And also consumers while at home are gravitating to online retail Wayfair to buy home furniture for their home offices while they're working. Now, having said that, the sectors that are the strongest right now are, like you're showing right now, Lululemon. Health and wellness are at the forefront of consumers. So those are the sectors, that's one of the strongest sectors. Lululemon, Garmin, wearables are all doing well. The discounters are seeing the strongest same-store sales. We're talking about Costco, Walmart, Dollar General, and Home Depot and Lowe's, as consumers fix their homes, are seeing positive same-store sales, while 75% of the other retailers are seeing negative same-store sales.
Jen, I want you to give us your final thoughts. I mean, when you talk to so many people, I mean, Lululemon's obviously one that's always hot. What else do you see?
I agree with everything that Jharonne just said, but I will tell you that over the next 3 months, as the stores reopen and all that product stopped up in the stores becomes available, we're going to see the deepest discounting we've seen in the history of retailing. So if you want to buy something, wait just a month or two. You can buy it at 50% off, 75% off. We're not going to see normalized pricing until we get back to sometime late in the fall because there's so much excess inventory that's going to be out there. It's going to be very interesting. The department stores are going to be as cheap as the off-price guys. So I think there'll be a lot of survivors. I think all the off-price guys survive, and I think they'll do well in 2021. But temporarily, we're going to see some really, really deep price discounts.
All right. Well, then we'll have to shop till we drop. Jen Rogers-Kniffen, CEO of J. Rogers-Kniffen WWE, and Jharonne Martis, Director of Consumer Research of Refinitiv. Thank you both.